Have you ever heard someone say it's all about your asset allocation and wondered what on earth they meant? It might sound like finance jargon, but asset allocation is actually one of the most important concepts in investing, and one of the easiest to understand once it's broken down. In this video, we'll explain what asset allocation is, how it works, and why it plays such a big role in growing and protecting your money over time. So, what exactly is asset allocation? In simple terms, asset allocation is how you divide your money among different types of investments, like stocks, bonds, and cash. Think of it like creating a recipe, where you decide how much of each ingredient to use. In this case, the ingredients are different assets, and the goal is to create the right mix based on your goals, your timeline, and how much risk you're willing to take. Your asset allocation determines the overall balance between risk and reward in your portfolio. Here's how it works. Let's say you're building an investment portfolio. You might choose to put 60% of your money into stocks, 30% into bonds, and 10% into cash. That split is your asset allocation. Why does it matter? Because each asset behaves differently. Stocks can offer high growth but are more volatile. Bonds tend to be more stable but offer lower returns. Cash is the safest but usually earns very little. By mixing these, you try to get the best of all worlds: growth from stocks, stability from bonds, and safety from cash. The exact mix you choose depends on your age, your financial goals, and how comfortable you are with risk. Younger investors usually take on more risk, while older investors might want more safety. But why should you care about asset allocation? Because it has a bigger impact on your long-term returns than the individual investments you choose. A well-balanced asset allocation can help you grow your money steadily while protecting it from major losses. It can also help you avoid panic during market downturns because your portfolio is built to handle ups and downs. Whether you're saving for retirement, buying a home, or just investing for the future, getting your asset allocation right makes a huge difference in how quickly and safely you reach your goals. Let's look at a simple example. Imagine two investors with £10,000. One puts it all in stocks, the other uses asset allocation, £6,000 in stocks, £3,000 in bonds, and £1,000 in cash. If the stock market crashes, the first investor could lose a lot, but the second investor is more protected because only part of their money was in stocks. The rest is in safer investments. It's kind of like dressing for the weather. If you're prepared for sun and rain, you're in better shape no matter what happens. That's exactly what asset allocation helps with. Planning for the financial forecast. Let's use a simple analogy. Think of asset allocation like building a meal plate. You don't just pile on steak and call it dinner. You add vegetables, maybe some rice or potatoes, a drink, and maybe a dessert. Each part has a purpose. The steak gives you protein, like stocks give you growth. The veggies are healthy and stable, like bonds. And the dessert is fun but best in moderation, kind of like risky investments. A well-balanced plate keeps you healthy. A well-balanced portfolio through smart asset allocation keeps your money healthy too, by managing risk while still giving you the nutrients, returns, you need to grow. To sum it up, asset allocation is all about how you split your money between different types of investments to manage risk and reach your goals. It's one of the most important decisions you can make as an investor, and it's something you can adjust over time as your life and goals change. Once you understand asset allocation, you'll see it's less about picking the perfect stock and more about building a smart, balanced plan that works for you. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.